Now it's time for more movers to keep your eyes on. Diane King Hall, host of Morning Movers, is here with us, taking a look. Some of these are earnings names. Some have some breaking news.
Yeah.
We're going to go through a few names. We'll start off with Block.
Yep, yeah, ticker XYZ. We know that's gone through some changes of name and ticker over the years under major pressure, down more than 20% off the back of both its latest quarterly numbers, a miss and weaker than expected guidance. Adjusted EPS came in at 56 cents a share. That was weaker than expected, much weaker than expected. Street was looking for 87 cents a share. Revenue, $5.77 billion, also weaker than expected. In that first quarter, that key metric, gross payment volume, that's basically that measure of monies that flows through Square, Cash App, et cetera. That was $56.8 billion, but that was weaker than expected. In terms of their guidance for both the second quarter and the full year, they issued softer than expected guidance. For the second quarter, they're expecting gross profit to come in at $2.45 billion. And then for the full year, they're projecting $9.96 billion. That is weaker than expected. Street was expecting more than $10 billion for the full year, expecting more than $2.5 billion for the second quarter. Essentially, they cited these macroeconomic conditions. They said, quote, we recognize we are operating in a dynamic macro environment, so we have reflected a more cautious stance on the macro outlook into our guidance for the rest of the year. And now, Nicole, you have analyst after analyst downgrading their views, whether it's the price target or their actual view on the stock. For instance, Seaport downgrading Block to a hold from a buy without a price target. That signals just a lack of conviction.
More cautious stance on the market outlook, macro outlook, like you said. I mean, I think so many folks came on and liked this name. I mean, this is not just a move on Wall Street. This is one that probably walloped a lot of folks.
Yeah, look, they've already been under pressure year to date. They have heavy consumer exposure. So, now you can see, given where they are with regard to their guidance, that they are concerned about where the consumer is going to be and how the consumer is going to be positioned this year. When you look at what the volume was, for instance, across Cash App, signaling that there is weakness in their consumer, especially, say, when you compare it to competitors. Seaport's not the only one that's downgrading their view. Benchmark has downgraded Block to a hold from a buy. I mean, previously, they were more constructive. They've also removed their price target on it. In terms of what Seaport said, they said Block is, quote, not an investable story at this moment. They called out the payment volume, the gross profit, earnings, the fact that they missed estimates, as I mentioned before, with regard to Cash App, the main call out there that's concerning there. Now, BMO also downgrading Block. They are downgrading it, though, to market perform from outperform. They have set a price target. It is significantly lower from where it was before. Their new price target is $58 a share. That is all the way down, Nicole, from $80.
Still higher than where we are. For a second, I thought you were going to say, and it's lower than where we are now. I was going to say, oh no, because the folks are not happy with a 23% sell-off today. How about Reddit, which is down about almost 4%?
This one is an interesting one to watch because it was actually higher in the pre-market. So I've been trying to make sense of what happened since the open. Look, they actually did better than expected, and it has had a strong run since its IPO. Year to date, it has had some weakness in terms of its share performance, but here's how it performed on the trailing quarter. EPS came in at 13 cents a share. She was looking just for 2 cents. Revenue came in at $392.36 million. Street was looking for $372 million, just above that. So it beat on both the top and bottom line. Revenue was up 61% on a year-over-year basis. Ad revenue also increased. That's up 61%. And so we know that investors are paying attention to the ad revenue story when we're thinking about the social media companies, because that's essentially like part of their bread and butter. But it held up, right? User growth beat expectations. In their previous quarter, user growth didn't beat expectations. And so you saw a share sell off in the previous quarter because of that weakness. But this time, users grew, daily active users 31% to more than 108 million. Street was looking for just a little more than 107 million. So that was a beat there. You had strong international performance, up 41% on a year-over-year basis. That actually outclipped U.S. Growth. You saw U.S. growth of 21% there. Their outlook, better than expected as well. Q2 revenue, they're projecting to come in between 410 to 430 million. That's above what consensus is, Nicole.
All right, next up, Exxon Mobil, which has an up arrow today after its report. We're also watching oil, which is at 58.68, said trading warily ahead of OPEC Plus meeting. So I guess there's still that wild card there. But when it comes to Exxon, thoughts on the report?
So they did better than expected on earnings. They did miss on revenue. Adjusted EPS was $1.76 a share. Street was looking for $1.74, so that was a beat. Revenue was more than 83.1 billion. Sales were actually short of expectation. That has to do with obviously falling crude oil prices, which does pressure that. But production did surge by some 20%. That's the equivalent of 4.5 million barrels a day. That's in large part because of that acquisition of Pioneer Natural Resources. You saw their production segment soar more than 70% overall. So that's up from the same quarter on a year-over-year basis. You saw also an increase, as I mentioned, their global production business. The reason you saw growth there was because of growth in the Permian and Guyana, as well as just they had some cost savings there. CapEx expenditures were essentially consistent with what their guidance was. But overall, the Street likes the picture here from Exxon Mobil.
All right, and last but not least, we know you're so excited for Grand Theft Auto 6.
Yeah.
Yes. No.
No, it's not coming yet. It's such a disappointment to all the GTA 6 fans, the Grand Theft Auto fans. They pushed back the release again. That has happened before. This time it's causing pressure on shares of Take-Two as a result. They came out on social media posting about this, saying, quote, "We are very sorry that this is later than you expected. We need this extra time to deliver at the level of quality you expect and deserve." So they're now expecting to release GTA 6 May of next year. The expectation was originally for fall of this year. So it's just, not good for the GTA 6 fans. They got to wait some more, play with the old game.
Yeah, so that's down right now 8%.
Yeah.
And let's just peek at what EA is doing. EA is up 6%. Very interesting to see. All right, the divergence.
Yes,
Thank
indeed.
you, Diane King Hall. Nice to see you. We covered a lot of names there for you.